Well, my next guest is always on the hunt for the next China. He is Brian Tycangco, the senior analyst on True Wealth Opportunities China. Brian, would you consider the country of India the next China?
Well, definitely India is the next China for the reasons of simply size, demographics, sheer market potential, the growing middle class in India that mirrors the same trend in China seen 20 years ago. Just huge opportunities all throughout. Most of it is just greenfield. Again, not China for the reasons of the governing style, how fast things get done in India relative to China. So it will uh, basically tell a lot about how fast, how the pace of development that India is going to go through in the next 10, 20 years.
So I did ask this question of Siddharth Singhai, who's the CIO of IronHold Capital, one of two hedge funds in the United States that invest specifically in India. Here's what he told me.
In India, you have only about 500 hedge and mutual funds looking at 5,000 stocks. In the US, you have roughly 10,000 hedge and mutual funds looking at 3,700 stocks. So just the total number of eyes on average looking at each of the stocks is much, much lower. And that allows a lot of these stocks to be neglected and thus mispriced.
Brian, those are his reasons for investing in India as a hedge fund manager. But what about you? What are your thoughts on what sectors are hot in India, and why are you taking a closer look, especially for those interested in getting into emerging markets investing?
Foreign investors have yet to really participate in this market. So basically, it's more of a contrarian play. Like you go where few people have gone or are going right now, and in the hopes of catching that big wave once they do start to come in. Another reason why I really like India is that, again, they have the same demographics as China when China was just starting out in the early 2000s. They have the same level of needs in terms of infrastructure, energy, real estate demand. All these things are going to factor in. And while everyone is focusing on the technology sector in India, and there's a good reason for doing that, they should also look at the basic structural development of India's economy, the way China has gone through in the past 20 years. And that is real estate, banking, energy, natural resources. And infrastructure is going to play a big role in this, just like it did with China.
You earlier said that you think of India as a contrarian play, that it's a place investors should go because few investors are going there. That is something that Prime Minister Narendra Modi is trying to change. He's literally held a virtual meeting in November with top institutional investment fund managers, trying to make the case that India is the place for foreign investment. And actually, right after he did so, there was a little bit of a surge of institutional investors going into India. I also asked Siddharth, about this question of bureaucracy, because Narendra Modi also tried to really reduce red tape and bureaucracy in India to make it more attractive to foreign investors. Here's what he had to say about how he sees the landscape.
If you're in tech doesn't really get regulated as much in India. So if you're starting a tech firm, if you're investing in tech businesses, you're good to go. Asset management is slightly more regulated. SEBI is a lot stricter than the SEC when it comes to regulations. And I'd say that allows accounting firms to hold the CEOs more accountable for, the quality of their financial statements. So that's a good thing. Where you might see bureaucracy getting in the way is the energy sector.
Brian, I couldn't help but notice that Siddharth talks about the low regulations in technology. Is that a part of why you are looking closely at technology plays in India?
Yes, because it's difficult to promote things like manufacturing when you have such a lack of infrastructure. But technology is something that they can actually spearhead right now and to promote by enacting or giving favorable regulations to these companies, and they're doing so. And India's always been known for being at the forefront of technological development. You have the earliest tech stars in the NASDAQ, mostly from India, like Wipro, Infosys. You have this huge wave of investments coming into India right now in the technology sector, not just because of these favorable policies, but because it's catching the tailwind from the whole trend of decoupling from China. You have companies like Xiaomi now already opening up, and even Apple, Samsung. Samsung has one of its biggest production bases now in India. Xiaomi as well, which is China's #3 smartphone manufacturer, and they're #1 in India. So investments are pouring into India on the technological front. The infrastructure needs to catch up, and I think it will at one point. Like I said, there's a bureaucracy in India, and the way the government's set up, it's a decentralized form of government, and there's a lot of state governments that you have to deal with, and a lot of red tape. If they do away with this, it's going to mean a lot for the development of India and how fast that they can catch up with China. And like I said, as a contrarian, you want to be in this country before things really get going.
If I want to get into India as a retail investor right this minute, what's my best play?
There's an ETF called the India ETF. So it covers basically most of India's blue chip companies. There are companies like Tata Motors, one of the largest car companies in India. Again, if you're looking at China and China's spectacular growth in car ownership, the same is going to happen eventually in India. And of course, Tata Motors, as one of its biggest car manufacturers, is a prime candidate for riding that growth. You have India's leading banks like ICICI Bank and HDFC Bank. So these are small companies right now that you can buy in the NASDAQ or in the NYSE.
Let me just ask you this, because you talk about sort of India being primed to be the next China based on its population, its demographics, its education level, and its need for
Rising middle
infrastructure.
class. Yeah.
Right. But how much do you think the catalyst could be, not just the low interest rates in the US and in Europe, but also this decoupling argument? Could those two things combine really light a fire under values and Indian investments in the short term?
I think you're already seeing it. I mean, India's stock market is now at an all-time high, and it's benefiting from a perfect storm of decoupling, low interest rate environment, and EMs being the darling of not just of this year, which we expect in True Wealth Opportunities China. EMs are going to be the darling of this decade.
Oh, wow. Okay. So some hot tip for 2021, folks. You got it here first. Thanks so much, Brian Tycangco. Always looking for the next China and helping our viewers and readers along with you. Thanks so much for joining me. I appreciate your time. And if you'd like to see much more Stansberry research, please follow us on YouTube. You can also follow us on Instagram, Twitter, LinkedIn, and Facebook. Thanks for watching. That's all for now.